The stock market. It's one of those things, right? We hear about it all the time on the news. We know it's a big deal. But for a lot of us, it kind of feels like this big black box. Super intimidating, right? And definitely confusing. So that's what we're going to do here. We're going to pry that box right open and see what's actually inside. Where it all started, how it works today, and maybe most importantly, what it all means for you. So to really get a handle on the stock market today, you might think we'd start on Wall Street, right? Nope. We're actually going to go way back in time. I'm talking the 17th century. And our story kicks off with something you'd probably never guess: spice traders out on the high seas. See, this whole thing, it didn't start with some grand financial theory. It started with a really practical problem, a huge problem actually. And the solution they came up with? Well, it accidentally created one of the most powerful financial inventions in all of human history. Okay, so let's set the scene. We're in the 1600s, and we're talking about a true giant of global trade, the Dutch East India Company. And seriously, when I say giant, I mean it. This thing was a massive, globe-spanning operation. I mean, the ambition was on a scale nobody had ever seen before. Just try to picture this for a second. Hundreds of ships sailing for months, sometimes years, into totally unknown waters. I mean, they were dealing with pirates, massive storms, disease, you name it. And this was all to bring back this incredible, priceless cargo: spices, silks, porcelain. Now, the potential profits? Huge, enormous. But the costs and the risks were just as big. Losing even one ship could be a complete financial disaster. So the big question was, how on earth do you fund something so risky? Well, the Dutch East India Company came up with a totally revolutionary idea. They thought, okay, instead of having one super rich person fund an entire voyage and take all the risk, what if we broke it down? So they went out to regular, ordinary citizens and they offered them a deal. They said, hey, help us pay for this voyage, and if it succeeds, you'll get a piece, a share of the profits. And just like that, boom. In these bustling coffee houses and down at the busy shipping ports, the world's very first stock market was born. It wasn't some grand design. It was just a really smart, practical solution to a huge problem. But man, did it change everything. Okay, let's fast forward a few hundred years to today. The massive sailing ships are gone, and those coffee houses are, well, they're our favorite local spots now. But that core idea, the one about selling shares to fund growth, it's still exactly the same. So let's use a modern example to see how it works. Okay, let's say we have a great local coffee shop. First, they'd pitch their big expansion plans to major investors. If those investors like what they see, they'll back the company and help it get ready for what's called an initial public offering, or an IPO. Now this is the big launch day. It's when the company officially goes public, and for the very first time, anyone, and I mean anyone, you, me, your neighbor, can buy a little piece of that business. And that little piece you can buy, that's called a stock. Now, here's the most important thing to get. A stock is not a loan. It's a certificate of ownership. So when you buy a stock, you're not just lending the company some cash. You are literally becoming a part owner of that company. It's yours. And this is where a really powerful cycle starts. See, your investment gives that coffee shop the cash it needs to open new stores, maybe buy better equipment, to grow. And as it gets more successful, guess what? More and more people want to become owners too. All that new demand drives up the price of your stock, which means your little piece of the company becomes more and more valuable. All right, so what actually makes a stock's price bounce around all day? Why is it up one day and down the next? The easiest way to think about it is like a seesaw. It's constantly moving, being pushed up and down by these two really basic forces: supply and demand. The dynamic is actually pretty simple. When some good news hits, say our coffee shop reports record profits, and more people want to buy the stock than sell it, all that demand pushes the price up. But if some bad news comes out and people get nervous and start selling off their shares, well, the supply of available stock goes way up, and that pushes the price right back down. It's this constant tug of war between all the buyers and all the sellers. But what's actually driving that supply and demand? You might think it's all about profits and balance sheets and cold, hard numbers. And yeah, that's part of it. But the stock market is also powered by something way less predictable, and that's human emotion. I mean, just think about all the different things that can affect a company's future, right? The price of coffee beans could shoot up. There could be a big change in leadership. A bad news story could come out. Heck, even a new government policy could change things. All of this stuff creates what traders call market noise. It's just this constant flood of information that can make investors feel either really confident or really, really scared. And this right here is the crucial takeaway. That collective feeling, that human confidence or that human fear is so powerful it can literally trigger everything from massive economic booms to absolutely devastating financial crises. It is the ultimate wild card in the entire system. And that is exactly why trying to time the market, trying to make a quick buck, is just so incredibly risky. That unpredictable human element makes guessing the short-term moves pretty much impossible. It's why you'll hear most financial pros say the same thing. Focus on reliable, long-term investing instead of trying to chase all those daily ups and downs. So we've come a long way, right? From 17th century spice traders all the way to a modern IPO. But let's bring it all home. What does any of this mean for you, sitting here right now? For the longest time, the stock market really did feel like this exclusive club, kind of like a secret game that was only played by the super rich on Wall Street. But the question is that still true today? No way, not anymore. The internet came along and just completely blew the doors off that old system. It basically democratized finance, putting the tools you need to invest directly into the hands of everyday people, just like us. It gave us access to the exact same markets as the big-time players. And what that means is that today, seriously anyone, who has the curiosity to learn can do this. You can invest in companies you actually believe in. You can support the businesses you admire. And you can start to build your own financial future. So that whole world of the stock market, the one that was born in those 17th century coffee shops, well, it's now more open to you than it has ever been in history. Understanding how it works, that's the first step. And getting invested, well, that's the next one.